Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equities are set to extend the exuberance that they witnessed in the previous session. Our second positive weekly close. Talk about GIFT Nifty signals a positive start coming in for Indian equities. US markets last night jumped as consumers remained strong and the sentiment rather remained strong despite inflation pressure. China's stimulus helps Asian stocks trade higher early this morning. Essentially, China cut bank reserve requirements by 25 basis points in the latest step to help support the Chinese economy. Let's talk about the FII data, where they've been selling shares, and also let's go on to now the FNOQs. Well, FIIs have been net sellers to an extent of 185 odd crore. They've been the net sellers to an extent of 17,197 crore in index options. In terms of the stock futures, they've been the net sellers. Where they've only turned buyers is the Bank Nifty futures and the Bank Nifty options. That's one that we need to watch out for. And of course, we are also going to be talking about the FNO ban. New in ban is Balrampur Chini, perhaps the only sugar company which is in the FNO category. Sugar stocks were on fire yesterday's trading session, and new in ban enters the list as Balrampur Chini. BHEL, Zee Limited also is new in the ban, and what still remains in the ban is Indiabulls Housing Finance, Delta Corp, Hindustan Copper, Manappuram, SAIL, India Cements, REX, National Aluminium Company, REC. In terms of option queues, 1.33 versus 1.25. That's the Nifty PCR ratio that we're looking at. Seems to be a little bit in the overbought territory, but it's a record rally coming in for the markets. It was a start which came in at record level and the close was also at record level. Let's get to know more about the trade setup, strategy of the day and FNO updates with Nirav Chheda, AVP Derivatives and Technical Research at Nirmal Bang. Morning there. Hi Nirav, new start to the day. You think again record milestone there for Indian equity markets, clearly bullish undertone, but what are you picking up and what's the strategy that you would have for the viewers?
Yeah. Hi, Nickey. Good to be back on the show. And yes, we are going to open at all-time high levels. And, very importantly, the bounce that we got from 19,200 odd levels, that was very significant, very important support levels that. And then we crossed the 50-day moving average and again the 20,000 levels, which was the peak at that point of time. So definitely now we are in new territory. And according to this breakout, Nifty is likely to come in up to the 20,500, 20,550 odd band. So at this point of time, there is still scope for about 300, 400 point rally from current levels. So look to buy even on the start. Some dips up to 20,150 odd should be bought into. 20,100 should be a stop loss. And once that 20,500, 20,550 band comes in, that is where you start booking profits selectively. Also, I believe Bank Nifty, which has been a laggard for such a long time, this is about to break out. Very good reversal, a rounding formation reversal is taking shape in Bank Nifty. And I believe this index is just on the verge of a breakout at about 46,300 odd. Once this breakout comes in, you will see a huge rally in Bank Nifty. Mind you, in this series, most of the banks started with very high rollovers, very high open interest, and they were on the short side because the Bank Nifty was languishing. And now, finally, we are seeing some short covering action. So, the whole cycle of short covering and then long creation will take shape in Bank Nifty, and that is why I believe banks will be the ones which will lead this rally, and probably Bank Nifty can come up towards that 47,200, 47,500 zone. So definitely this is where one should put your money in. Go ahead, buy banks aggressively. You will get good gains going forward.
Sure. I was also wanting to check about something like sugar stocks, because along with your strategy on Bank Nifty, Balrampur Chini enters into ban. New FNO ban, new FNO set of companies which have entered the ban. What do you make out of it, and what's the strategy for Bank Nifty also?
Yeah. So, see, first of all, sugar as a whole, Again, there was a big consolidation that went in, and finally everyone is breaking out. So the likes of Balrampur, EID, Praj Industries, even the smaller ones like Bajaj Hindustan, Renuka, these all stocks are witnessing price volume breakouts, and that is why you're seeing such good moves in these stocks. So I definitely believe there is much more move left in these stocks, and one should be buying good sugar stocks. My pick will be EID Parry because a big price volume breakout has come in yesterday. One can look to buy at current levels with a stop loss of around 520 odd. You can witness 640, 650 coming soon. Second one will be Balrampur Chini. I definitely believe this stock has it in it to move up now towards that 510, 520 odd band. So definitely a good stock to buy. Yes, it has come into band, and probably 2 3 days of consolidation will take shape, and probably then you will see the stock moving up, but nothing to worry about. The only thing that is worrying really on the ban stocks are that there are too many stocks now in ban, that
Nirav,
is
hold on to that thought. We're going to be addressing in the markets open in just a bit. Just wanted to understand if, yes, we are looking at a positive close, beg your pardon, open coming in for the markets. 20,160 level, way above that 20,150 mark, 0.3% clocked in for Nifty 50. And if you talk about the exuberance, it was a record rally yesterday. Today we have perhaps clocked in a new milestone. And also, let's look at Bank Nifty just to see where the traction is. Yes, we are looking also at gains coming in to an extent of 0.3% for Bank Nifty Index, 46,150 mark. That's where we are looking at, perhaps flirting around that level, but near to that level. Let's look at Midcap and the Small Cap Index. Midcap Index has registered gains to an extent of 0.6%, a bit of outperformance coming in from the Midcap Index. And in terms of the Small Cap Index, we are looking at gains to an extent of 0.75% clock in for Small Cap Index too. Let's look at the other sectoral indices that we have on the chart right now. Look at IT, it's doing well. 0.5% of gains coming in for the IT index. Along with that of pharma is also doing well. 0.3% gains coming in for pharma basket. Apart from that, FMCG, a bit of profit booking perhaps creeping in to the sector. But let's look at the other sectoral indices that we have, something in the likes of perhaps auto, realty, and essentially metal. Metal is where the flavor is. China stimulus is coming. Let's get to see if that's the one which is doing well in trade. Auto doing well, gains to an extent of 0.75% coming in for the auto index and realty index. Let's look at that. Well, a bit of gains perhaps coming in even for that, 0.25%. But essentially, let's look at metal stocks and the index. How is that stacking up given the kind of stimulus that's coming from China? 0.75%, more than that of gains coming in for metal index. No surprises there. Let's look at the top gainers and the top losers list that we have early this morning. Bajaj Auto along with M&M and Wipro. These are some of the top gainers that we have on the list right now. JSW Steel, Tata Steel and Hindalco, clearly on account of the stimulus that is coming from China, which is the biggest commodity market that we have, perhaps the producer and the consumer, which is leading to this rally. Any amount of good news for China usually augurs well for metal stocks, so to say more towards the non-ferrous, but Hindalco is right there along with JSW Steel and Tata Steel. Let's look at the top losers out there on the screen. HCL Tech, Tata Motors and HDFC Bank are some of the other gainers that we have on the list. Essentially, look at the losers list. HUL, Asian Paints and Adani Ports. These are some of the top losers that we have early this morning. In terms of the other losers that we have, Kotak Mahindra Bank, ITC and Britannia. Some of the other losers that we have early deals. Well, let's go back to Nirav and check with him. What does he make out of something like a metal stock? They've been doing too well for past few sessions. Something like a sale probably cuts it for him. Nirav?
Yeah, metals as a whole, they've witnessed a huge rally post 2020, but after mid 2021, a long consolidation has taken shape. And finally, all these metal stocks are now breaking out, which is a very good sign. So for that matter, SAIL has broken out above very important resistance of 95. This was one area from where it had come down for multiple times, and now it is moving up. I believe the range for SAIL has opened up, and it can move up towards that 120, 125 band, and probably even higher. But at this point, that can be your target. So look to buy the stock at current levels. 94 should be your stop loss. 120, 125 is where you book your profits. Also, Tata Steel in the metals pack looks very, very good. A long, big breakout has come in this stock around 120 odd levels. So you can keep a stop loss around 125 at this point and go long in this stock. I believe this stock can go up towards that 155 and even higher probably.
All right, Nirav, thank you so much for taking out the time and joining us this morning. I'm just going to address in few stocks and news perhaps. Restaurant Brands Asia is one that I really wanted to talk about. There's a big breaking development there. 25% equity has changed hands. That's a big deal that we're looking at in terms of the equity stake. Promoter entity, that is Everstone, is likely the seller for this stock. Let's look at how the stock has been auguring well, or some amount of caution has crept into this. There's a strong demand, 90% long only and 10% hedge funds are buyers in today's block. That's the one that we have. In terms of what we have on Titagrah Rail. Now, this is one stock that has been doing extremely well in trade today. And in today's session, the stock is acting no different, perhaps a bit of gains coming in. There's an HSBC report on this one, which has maintained the buy rating, and the target, however, has been raised to rupees 900 from 750 per share. It talks about solid core volume trends, which is underpinning strong demand for railways wagons from private sector. Wagon orders from the private sector come with a superior profitability and working capital terms. Essentially the two parameters. The company overall, the brokerage says, has a strong order backlog that provides strong visibility to the growth outlook. It expects overall a 2.8 times jump in the profitability from FY23 to 26 with an average ROE of around 20% and more diversified business. So that's the word coming in for Titagarh Rail. Let's look at CG Power. Essentially, DAM Capital has now initiated a report on this one, and the stock has been moving higher, 1.5% gains coming in for this one. DAM initiated a buy rating. The target price is at 500 as compared to the stock price of nearly 450. The company has seen a sharp turnaround in growth and profitability across verticals segments. That's what brokerage has to say. It also says that this has set a strong foundation of its next leg of growth. The company is strengthening business by focusing on market share expansion. Initiatives are only expected to boost efficiencies, enhance productivity, and optimize cost, driving earnings CAGR growth of nearly 26% from FY23 to 26. Let's also talk about United Spirits. Well, we saw the stocks being in great spirits in previous session of trade, along with UBL too. Let's look at how United Spirits is stacking up. The company has filed an appeal before Joint Commissioner of Commercial Taxes, an order that was passed by an additional commission of commercial taxes. That's the word. Order with respect to applicability of GST rate on royalty income. Essentially, that's the word that we have for United Spirits. Let's get to see if the stock is holding up well. But that's that when it comes to the entire stocks and news that we need to address this morning. We are also going to be talking to Hemang Jani, a stock market expert and also a trainer in the markets, to get to know more on his perspective about the valuation and the Indian equities. But that's just going to be in a bit. Let's talk about the IPO, Yatra online, which is open for subscription. It's the India's largest corporate travel service provider and the third largest online travel company, which is going public with its initial public offering on September 15. That's Friday, today, to raise around 602 crore just from fresh issue. Overall, it's going to be raising in 775 crore. The issue has been priced at 135 to 142 per share in terms of the holding company. Let's talk about that. Nasdaq listed Yatra Online Inc. is being founded by Dhruv Shringi. Of course, is the parent company of Yatra Online Inc. That's one that is NASDAQ listed. The company is listing here. Let's just say the subsidiary is listing here. The company intends to utilize around 150 crore of its proceeds for strategic investments, acquisitions, and inorganic growth, and rupees 392 crore worth investment in customer acquisition and retention. Along with that, organic growth initiative. Let's also talk about the price band of this company, where it's around 135 to 142 a piece, which is at a sharp discount as compared to what the company had issued the shares to one of its promoter last year, which implies a downgrade in terms of its own stock price to an extent of 40% in the last 1 year. That's where the concern is coming from. But that's the perspective that we have for Yatra Online, along with some of the facts that we've presented. Of course, we caught up with the management yesterday, and he spoke about the diversification. He spoke about his USP in terms of the business, and also why his revenue growth actually lags as that compared to peers. We're going to be talking also to Hemang Jani right now. Along with that, let's actually first tune into the little conversation that we've had with the Yatra management. Pleasure is all ours. I'm going to start off straight up by asking you, because you are operating in a very competitive space, that is the online travel space. What distinguishes you as compared to peers like ClearTrip, Make My Trip, Easy Trip, Thomas Cook? How different is your model as compared to that of your peers?
Sure. And that's an excellent question straight off the bat. In terms of our business, there are two legs to our business. One is the consumer business under the Yatra.com brand. The other is the corporate travel business, where we have a platform that's been built specifically for large corporate customers, companies which employ tens of thousands of people to manage their business travel and business travel processes. In that segment of the large corporate customer base, we are the market leaders in India. And we have over 800 plus large corporate customers that work with us currently on our platforms for managing their organization's travel and all related needs. So that's a fairly comprehensive technology solution which has been built by us over the years. It's a solution that will integrate into the company's ERP systems, into the HR.
All right, that was the management talking about the differential or the USP of its model as compared to that of its peers. But let's bring in Hemang Jani to check about his perspective. What does he make out of IPO of Yatra, along with that of slew of companies which have lined up to tap the primary markets in next week itself? Hemang, morning there.
Morning.
All right, what's your perspective? Have you had a chance to look at Yatra, which is open for subscription today? Do you see any kind of differential model with something like Ease My Trip, Clear Trip? What is your view overall on these online travel companies?
Yes, I think some of the IPOs which have been launched are looking quite interesting. Yatra, I haven't looked at the detailed valuations, but clearly given the kind of traction that we are seeing on the traffic in terms of this hospitality, airlines, there is surely a good amount of interest across some of the strong, platform players. And also, one more company which has launched the IPO, Zaggle, that is also looking quite interesting in terms of the business model, very niche, business model. And also the anchor book of Zaggle is extremely good. And of course, RR Kabel is something that we've been liking, and we think that that is a very interesting opportunity for retail investors, given the positioning it has. And I think from a long-term perspective, or even for that matter, listing perspective, that will provide a great opportunity.
Okay, first I'm going to talk about Zaggle, because I believe not just the anchor book, Hemang, if you look at the pre-IPO placement, Madhusudan and I guess Ashish Kacholi are a part of the pre-IPO placement for Zaggle. So that's one. And also for RR Kabel, do you think if you're supposed to tap on that wires and cable story, there are existing players, the valuations seem to be a little bit on the upside given the kind of revenue that the company has clocked? Sure, it's going to be an outperformer in terms of the industry growth, but margin still seems to be a bit of an issue for RR Kabel, right?
So in terms of valuations, whenever you have good established companies launching IPO, sometimes the valuations will appear a bit expensive. But I think what really matters is what kind of pedigree they bring to the table, what sort of growth, they will deliver over the next, let's say, 2 or 3 years. So I think from that perspective, it looks to be a good, strong, company. Also, it has a larger component of export, earnings, which is very good, and they've been gaining market share across categories. So I think it should do well from a medium to long term perspective.
Fact that TPG is actually making 4x of this investment in 5 years for RR Kabul. Does that, and now the IPO is essentially an OFS-led IPO. Almost 80-85% of the IPO is OFS-led. What's really in it for shareholders?
Yeah, I think if you look at the promoter holding post OFS, that continues to be on a higher side. And I think from a new investor perspective, what matters is what sort of growth the company delivers and what kind of appreciation one can expect. So I think we should look at these two elements separately. Some people who are exiting, if they had invested 5 years, 7 years back at a much higher price, that does not mean that the company will not deliver a good upside potential if the performance is good. So I think clearly it looks quite stable to me.
All right. Also, I want your perspective on sugar stocks. They've been on fire since previous session of trade. Balrampur Chini perhaps is on F&O ban today, but overall your view, assessment on the space, given that sugar season has also started. Do you look at it any differently? Are you also bullish on the space?
So the space is looking good for a couple of reasons. The inventory position is extremely in favor of the higher prices. Globally, we've seen that there are some issues because of which the prices will continue to remain higher. And ethanol has played an important, trigger for the entire sector. So it is looking good. My only concern over here is that the stocks have run up in the last few days. And I think if we can fine tune our entry, Balrampur, Shakti Sugar, TCM, these are the good, strong names. And one should really try to enter when you see a little bit of cool off, maybe about 5 to 7%.
All right. Also, something like in restaurant brand Asia, there was a block deal to an extent of 25% of equities got changed hands. How do you look at the entire space, and what's your view on just this company?
I think the entire, this quick service restaurants are in for some sort of a secular growth for next, let's say, 2, 3, 4 years. And we've been liking Jubilant, restaurant brand India, Devyani, even Westlife. I think they are all looking quite good. But specifically, if I have to point out, I would go with something like a Westlife, because there is a larger comfort in terms of valuations, and the kind of product positioning that they have is looking much more stronger to us. So I think from a investment perspective, that looks quite compelling.
All right, I also want to understand your perspective on the entire metal space right now, specifically what we have in terms of the news coming out of China stimulus, which seems to be auguring well for the metal space, so to say more for the non-ferrous. How are you looking at the two segments, that is ferrous versus non-ferrous? What do you like the most, and your select bets within that space?
So definitely, the space is looking very, very positive given the stimulus hopes in China. But what we must understand is that the data which is coming out from China is a little bit patchy. So one really cannot take a very, aggressive long-term call here. I think from a positional perspective, NMDC is looking quite compelling because there's a price hike. The volume also have improved in the last 5 months, and there is going to be a rally on the seaborne iron ore prices because of the China stimulus. So that is extremely good for something like NMDC. And I think Jindal Steel and Power is another name that we like at this point of time, purely because they are going to be biggest beneficiary of the current pricing environment, which is there, with a very small debt on their books.
All right, Hemang, we're just going to leave it at that. And thank you for taking out the time to join us this morning. All right, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Moneycontrol is bullish on India. Join the campaign. Tweet to us with hashtag MC Bullish on India.